customer, Applied Materials, the dominant semiconductor equipment maker, delivered record third quarter fiscal 2026 results driven by an unprecedented surge in AI demand. Revenue hit a record $9.1 billion, representing a 25% year-over-year increase. Non-GAAP earnings per share reached $3.50. Operational efficiency surged as non-GAAP operating margin expanded 190 basis points quarter-over-quarter and 330 basis points year-over-year to a record 34%. This marks the company's 13th consecutive quarter of year-over-year gross margin expansion. Core growth continues to be anchored in leading-edge DRAM, foundry logic, and advanced packaging, alongside strength in the ICAPS division for AI-related power and optical chips. Applied Global Services is pacing to grow over 20% in calendar 2026. China accounted for 26% of semiconductor systems and services revenue. Looking ahead, management issued a blowout fourth quarter guidance. They project revenue of approximately $10.25 billion and non-GAAP EPS of about $4.02, give or take 20 cents. They are maintaining their policy of returning 80 to 100% of free cash flow to shareholders via dividends and buybacks. Vivek Arya from Bank of America opened the executive Q&A by probing the long-term sustainability of demand, given that memory customers are locking in 3 to 5 year supply agreements. Chief Executive Officer Dickerson clarified that these extended commitments stem directly from an unprecedented capacity gap in advanced chips required for AI infrastructure. Customers are providing rolling 8-quarter forecasts to secure critical tool deliveries and ensure field teams can execute aggressive fab ramps. Stacy Rasgon of Bernstein followed up on gross margins, asking whether current pricing momentum and product mix can sustain long-term structural expansion. Chief Financial Officer Bryce Hill emphasized that value-based pricing, paired with high-margin portfolio additions in advanced packaging and materials engineering, provides a durable tailwind. Hill noted that semiconductor systems gross margins have surpassed 55% as customers willingly share value for high-impact tool performance. Timothy Arcuri from UBS queried the full-year semiconductor systems growth trajectory, reminding executives that previous commentary pointed to growth above 30%. Hill confirmed that demand drivers have meaningfully accelerated since the last quarter, pushing anticipated calendar 2026 growth well past previous targets. Cloud service provider capital expenditures and newly announced fab projects continue to revise equipment delivery timelines upward. Krish Sankar of TD Cowen pursued Arcuri's thread, asking what specific customer dynamics are driving these elevated delivery requests. Dickerson explained that chipmakers are deploying creative cleanroom configurations to accelerate tool intake ahead of schedule. The urgency is propelled by an intense race for technology leadership in gate-all-around nodes, high-bandwidth memory, packaging, and power-efficient compute architectures. Harlan of JPMorgan inquired about the ICAPS segment, which was previously guided to be flat to slightly up, and how AI-driven demand for power and optical devices is shifting that trajectory. Hill observed that ICAPS factory utilization rates are rising steadily across mature nodes. The pull for trailing-edge power delivery systems and silicon photonics is providing strong incremental support to overall systems baseline revenue. Blayne from Jefferies addressed the doubling of NAND revenues this quarter, seeking clarity on whether this reflects a durable recovery or merely a bounce off a low comparison baseline. Hill characterized the jump as part of a low baseline recovery where customers are selectively upgrading technology layers rather than deploying massive greenfield spending. The broader investment prioritization remains firmly tilted toward the DRAM and advanced logic nodes. Schneider from Goldman Sachs requested broad commentary on the pervasive strength seen across all product segments and business units. Dickerson highlighted that materials engineering innovations, spanning epitaxy, chemical mechanical planarization, and process diagnostics, are outperforming the baseline equipment market. He noted that process diagnostics and control alone is on track to grow more than 50% in calendar 2026. Mehdi Hosseini from Susquehanna pressed management on customer execution risks and supply chain capacity as output requirements scale upward. Hill reassured that Applied has nearly doubled its global manufacturing footprint over recent years, including new operational facilities in Singapore. The company is actively recruiting and training field engineers to support the targeted doubling of quarterly system output capacity by 2028. Srini Pajjuri of RBC Capital Markets closed the session by asking about technological inflections in advanced packaging, specifically the commercial timeline for panel-level packaging. Dickerson reasserted Applied's position as the overall market leader in packaging, projecting packaging revenues to expand over 70% in calendar 2026. He confirmed that Applied has established a comprehensive portfolio of panel-level technologies, including digital lithography, deposition, etch, and electron beam review, positioning the firm to capture the next wave of architecture shifts. Applied Materials continues to leverage its technology portfolio and expanded field execution to capitalize on multi-year AI capital investment cycles.